Sir, why, sir? Putting namaskara morning. Good morning. Good afternoon. How are you guys? Good night, sir. Night I'm watching your video. No problem. How are you, my dear buddies? Shall we begin? One second. So I've opened the Bayrack, my dear friends. So in the last class, we were doing this chart on share issue expenses. Do you remember? Sir, we follow FIFO. First in, first out. First in, first out. We don't know what you did, sir. You only don't know what you did. Hey, I know, da. Yeah. Okay. So let's move on. You have to move on in life. Sure, no. Sir, don't give gyan. Please start the class. 1 second. I will. Sir, what is this line? Okay. So, let's go into a very interesting area, my dear friends. Let's go into a section called 40A2. A2 in Kannada is slap. 40 A2. I told you, now I'm a little mad fellow. 40 what? A2. Come to page B49. 40A2. 40A basically is what? Expenses or payments which are not deductible. Too many things here. 1 second. Shall we? Okay. So 40A2 is what? It is expenses which are not deductible. Expenses or payment which are not deductible means what? These will be disallowed. What will be disallowed? Let's see. So let me just go to section 40A. In that we will see what is the dialogue. The provisions of this section shall have effect, notwithstanding anything to the contrary in any other provision of this act relating to the computation of income under the head PGBP. Deadly. They are trying to tell whatever other sections may tell, my dear friends, this section, if there is any conflict, which will override? 40A will override other sections. Obviously, when we see, for example, if I have to pay salary to somebody, is it allowed under 3236? Yes, of course it's allowed under 3236 specific. Or is it allowed under 37? Yes, it's allowed under 37. But if it comes within the rigors of 40 capital A, and whatever you do, it will not be allowed. Whatever you do, it will not be allowed. So, because 40A are specific areas which speaks about expenses which are not to be allowed under any circumstances. Whatever you do, it will never be allowed is what this particular section talks about. Okay. Now, first of all, shall have effect notwithstanding anything to the contrary contents. Obviously, it overrides the conflicting provisions. I gave you an example. Salary is allowed under 32, 36, 37. It's allowed in all these sections. Or any expense allowed there. But if it's specifically disallowed here, then this will override. That is what they say. Now, let's read this. Let's read this. Now, many concerns happen in such a way that, the son will have one business, and to ensure that, GST limit, etc. will not be crossed, he will open some 4 or 5 businesses. Here, his parents will be, what do you say, made partners there. Here his brother will be made, two brothers will be made. Here sisters will be made. In one more thing, brother and sister will be made partners, many entities. Then of course from this entity, again to claim expenditure, simply will start transferring money here, creating fake invoices and creating expenditure. This was happening rampantly across India. So government wanted to curb this particular practice. Not just that, even if it's a a holding company to subsidiary company relationship, or if it is any company, one company in which the other company has around, let's say, 30% share, whatever it is, it was happening a lot. It was happening a lot. To curb this particular practice, right? Payments made from one person to another person. For instance, I would like to tell you that there was a company called Rendezvous Sports Private Limited. Rendezvous Sports Private Limited. There was a, what do you say, IPL team called Kochi Tuskers. They had one thing in common with RCB. Both have never won an IPL. Anyway, okay. So Kochi Tuskers, they both have never won an IPL. Anyway, Kochi Tuskers hardly played one season. One season only they were out. Now the thing is, this suddenly came. If you remember, Kochi Tuskers suddenly came, suddenly went. How they came, how they went, don't know only. So Rendezvous Sports Private Limited, one of the directors of Rendezvous Sports Private Limited was Dr. Sunanda Pushkar. And everyone was questioning her inclusion and as a director because she had no, knowledge about the sport, but she was made the director of Rendezvous Sports Private Limited. This came during the, where a person, him, the way he speaks, Dr. Shashi Tharoor. Dr. Shashi Tharoor was a member of parliament that time, and through his blessing, Kochi Tuskers came into force. This class has got nothing to do with Congress, BJP, etc. I am only here to state facts. I will bash Congress also, I will bash BJP also, I will bash everybody. And I will give credit to whoever deserves it, in whichever party. So this is not a political discussion, let me tell you very, very honestly. I am least interested in, raking up political issues here. But nevertheless, this is the fact. I speak only facts. You can also check online. Whatever I tell is the truth. At Balaya's one video is there, no? Don't trouble the trouble. If you trouble the trouble, trouble troubles you. I am not the trouble. I am the truth. 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 Like that, I am telling. You know Balaya? Search Balaya. Deadly fellow is. Yes. So if you see, Doctor, our Andhra friends here will be all laughing. High five. Andhra people, high five. Andhra Telangana friends. Yes. So, Rendezvous Sports Private Limited. Okay. So, Kochi Tuskers was there. Dr. Shashi Tharoor. Dr. Shashi Tharoor was, involved in, bringing this Kochi Tuskers to life. They analyzed, later suddenly it got closed and all this because there was money payment made. Why I am telling is, Sunanda Pushkar was given lot of benefits, lot of perks, lot of shareholding because she was the wife of Dr. Shashi Tharoor. The thing is, payment was made to her, then payment was made, this is an allegation, to him through various connected entities. Not one, not two, my dear friends, 400 such entities were there. Complex web, complex structure was there. They were not able to find out only. The only person who knew the truth was Dr. Sunanda Pushkar, who unfortunately committed suicide in a hotel in Delhi, or I think they are Delhi, 5-star hotel. She was found poisoned, or rather she'd taken poison, whatever. Anyway, the court case went on and Dr. Shashi Tharoor was proven not guilty. Anyway, she died. So this 400, 500 complex companies, payment made from one company to this company, this company, this company, this company to this, to this, this to this, full crazy it was. Right? So under income tax, what will happen to these things? They are all connected entities. Point number one. Point number two, can I make payment to Sunanda Pushkar? And she doesn't even have the, caliber to run a sports company, and I'm paying some crores of rupees to her. Is it allowed? So under Companies Act, there was no provision for all these, to control all these things. So they brought about two. One is 2 clause 87 of Companies Act. One more is section 186 of Companies Act. Under 2 clause 87 of Companies Act, they said if a holding company has many such subsidiary like that, I am not going to allow it. They said one holding company can have only two subsidiaries. They're talking about vertical layering. Layer 1, layer 2, and that has to stop. This came sometime in 2019. Then, sir, what about Reliance? It has some 140 subsidiaries. They said whatever happened before 2019, you ignore. Whatever is going to happen from now, only two allowed. Mind you, if it's a wholly owned subsidiary, it's ignored. So basically, if this is a wholly owned, this is wholly owned, this is wholly owned, this is wholly owned, then you can have many layers. But if it's not wholly owned, if it is like more than half, but less than 100% obviously, then two layers. Then in 186 also, 186 subsection 1 was amended to insert something called as investment companies. So they said if company 1 is there and company 2 is there, in between them, there can be only two investment companies. Investment company 1, investment company 2. So they said one company can invest in the second company through not more than, through not more than two investment companies is what they said. Through not more than two investment companies. Here on the other hand, 2 clause 87, it said a holding company can only have two subsidiary companies. This was brought about there to ensure that these things won't happen. Now, what are the implications under our law, Income Tax Act? Let us see. That is what we are going to talk now, my dear friends. 48.2, slap. Income Tax Department will slap you if you do all these things. Correct? So you can remember like that. Income Tax Department will, what will it do? Slap you. How they'll slap, we'll see. Correct? Let's see how they will slap us. Where the SSE, who's an SSE, we'll see, incurs any expenditure in respect of which payment has been, something fell, okay, let it fall. Where the SSE incurs any expenditure in respect of which payment has been or is to be made to any person referred to in clause B of this subsection, we'll see. And the assessing officer is the opinion that such expenditure is excessive or unreasonable having regard to the fair market value of the goods, services or facilities for which the payment is made, or the legitimate needs of the business or profession of the SSE, or the benefit derived by or accrue to him thereof. So much of the expenditure as is so considered by him, to be excessive or unreasonable shall not be allowed as a deduction. That shairi is there. No, this is like shairi to my ears. So much of the expenditure as is so considered by him. By him means who? By the assessing officer. Sir, what if lady assessing officer is there? Hey, guys, he includes she. General, good question. Good question. He includes she. He includes she. He includes she. General Clauses Act. If you have watched a movie called Gargi, in Gargi movie, in Gargi movie only, there is a transgender judge. Very good movie, man. Transgender judge is there. Will transgender assessing officer also be included? So guys, I'm asking a very serious question. Transgender protection bill is still tabled in the parliament. Once it becomes an act, there will be, of course, equal rights to transgenders also. So until such time, obviously it will include, now we have to call them they. There's a terminology for them, right? Right, the pronoun for them is they. So anybody who is, of course, the LGBTQ community as well as transgenders, we have to call them, they. Certain part of it, not the entire LGBTQ community, yes. So you should know all these things legally, how it works. Cool, got it? So let's come back. To be excessive or unreasonable shall not be allowed as a deduction. Where assessee incurs any expenditure of payment of which, first of all, excessive or unreasonable. So what are the keywords? Excessive or unreasonable. To what all? For SSE. Then this is the list, guys. If you start reading this list, we'll all die together. So let's just read it quickly. No need to study it in depth. Quickly we'll read. Where SSE is an individual relative, SSE is a company, firm, association, NHUF, director, partner, member, association, or family, relative, etc. I'm simply not reading it. I have made a chart to make it little easy, don't worry. An individual who has a substantial interest in the business or profession. What is substantial interest? You see here. 20% of the voting power, not less than 20% of the voting power. So guys, under Companies Act, if a company X Limited is controlling Y Limited, if it has more than 50% of total voting power, then it will be called as a subsidiary company. If it has more than 20%, X Limited has 21% shareholding in A Limited, then A is called as an associate. 20%. That 20% only associateship of Companies Act is nothing but substantial interest here. Check it out. Beneficial owner of shares. Beneficial owner of shares to the tune of how much? 20% of the voting power. 20% of the voting power. In Companies Act, that voting power is how much? 20% again. That is for associate. That is for associate. 2 clause 6 of Companies Act. Sir, show me proof. 1 second, bro. 2 clause 6 of Companies Act defines something called as significant influence. So if one company is holding 20%, 2 clause 6, you see? Significant influence. Significant influence means what? Control of at least 20% of total voting power. Are you seeing the matching? At least 20% of total voting power, one matching, then 40A. Not less than 20% of the voting power. Matching. But 2 clause 6 of Companies Act only speaks about one company holding in another company. But this is what? I am an individual. I control 25% of your company. I am called as, of course, I have substantial interest in your company. I have substantial interest in your company. So guys, any excessive payment, everything is covered here. Any excessive payment, everything is covered in this particular section. So what exactly is excessive? Before that, we will understand who are these people. Excessive or unreasonable is one part of the story. And the second one is what? Incurs any expenditure. Payment is made to any person. Who is that person? This person. Where the assessee is an individual, that person will be the relative. Where assessee is a company, then the director. Where the assessee is an individual having substantial interest in the business of the profession of the assessee, any relative of such individual. I'll give you an example. Firm, company, association or HUF having a substantial interest in the business of the profession of the assessee, partner, etc. We'll see. Check it out. That's why I'm saying page 49, B49 you come, you see this list. I try to make it simple. Individual, for individual, what is it? Relative of the assessee. Sir, who is relative, sir? Relative. As per Companies Act, or should I say as per IT Act? As per Companies Act, 2 clause 77. Right here. Companies Act, Income Tax Act, Companies Act 2 clause 77. Income Tax Act you search now. Where do you search always in the Bare Act, guys? Section number 2. I'm just trying to tell you where it will come. Generally, guys, in section 2, when you go, you have to keep seeing what the alphabetical order. You see, keep going. I'm just trying to tell you how to see all this. Keep going down. A, B, C, D, E, F, G, H, I, J, K. That's how you should search. L, M, N, O, P, Q, R came here. See, rates in force. See, 241. 2 clause 41. In relation to any individual means, okay, first we'll see here. For Companies Act, no, person is covered plus spouse, brother plus brother, sister, father, mother, son plus son's wife, daughter and daughter's husband. So if a person is there, spouse 1, 2, 3, 4, 5, 6, 7, 8, 9 relationships. It can go plus or minus. If you have some cricket team, as your parents produce one cricket team, thinking all of you will play for India. You didn't even play in your gully cricket team. Disappoint. As usual, we all disappoint our parents, correct? That's part one of the story. IT Act. IT Act, what does it say? So basically your Ajja, your Tata, your grandfather, your Nana, Dada, all these fellows are not relatives as per Companies Act. Your grandchildren also not relative. What about sister-in-law, mother-in-law, Bobby, Devar, correct? Chikappa, Dodappa, all these people, all your basically uncle, auntie, nobody is covered. Nobody is covered in Companies Act. Income Tax Act, you say, means the husband, wife, brother, sister. Means what, guys? If a person is there, then the spouse is covered. Brother, sister, okay. Next you see, next one deadly line here. Or any lineal ascendant or descendant, deadly. So here, of course, your stepfather, stepmother, stepbrother, step-sister, stepson, stepdaughter is not covered. It's an error of omission. Sir, step-spouse, sir? Hey, step-spouse and all is not there, guys. Okay, but Income Tax Act, brother, sister, lineal ascendant, lineal descendant, parents, lineal ascendant, descendant. So obviously, whoever your forefathers, if it's legally adopted, even step is covered. Lineal ascendant, father, tata, muttata, grandfather, great grandfather, great, 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 everybody is covered. Then go down generation also. They also did cricket team, you did table tennis team, or you also did cricket team, everything put together. Sir, with different people, I did one cricket team, one table tennis team, with one more person, I did hockey team. Hey, only one spouse. The act says managing one only is difficult. Don't tell this, okay? I'll be dead. Okay. Managing one only is difficult, sir. What will manage? Right? Yes. Don't tell all this, please. Kindly. Yes. So what happens? Lineal ascendant, lineal descendant. This is what? This is very simple. That is upar niche, aage piche. Upar niche, aage piche. That's all. That is up and down, then side. Here what? Aage piche is there. Then full upar niche. Everybody is covered. Got it? Just for everything, unless specifically mentioned in that particular section only, is upar niche, aage piche will keep on going. Right? That is the Income Tax Act. Come back. So that we have seen. Come to the notes. Hey, where did notes go? Here. Where were we? Page 49. Sorry. Page B49. Okay, done. So basically, for the company, firm, AOP, HF, director or relative of such director, partner or relative of such, in case of a firm, any member, in case of all SSEs, whether you are an individual or a company, whatever, any individual who has substantial interest in the SSE's business or profession. Now, SSE can be a company also, SSE can be an individual. Now, let's take one example, guys, just for your knowledge. Individual will take. See here, neatly, you will listen to this, you will understand. See how many people are covered. Assume SSE is a sole proprietor, is doing dry cleaning business. Okay. For that fellow, payment made by that SSE to how many people are covered? Check. One relative of SSE. Let's name him A. It can be everything. Aage, piche, upar, niche. Everybody. Then it says what? Any individual who has a substantial interest in the SSE's business. Let us say his friend, for example. His friend owns 30% of this laundry business, dry cleaning business. Not that fellow also. And this company, SSE, that is sole proprietor, pays some excessive expenditure to this guy. Means he'll pay some salary which is in excess. What is excess? We'll see. 40A2 will get attracted. Not only this fellow, but also his relative. Imagine. Relative of such individual. They have used the word what? To make this chart, it took me some 40 minutes. Honestly. See here, relative of such an individual. Which individual? An individual, any individual, friend who has a substantial interest in the business or profession of the SSE. In my example, SSE is an individual in my example. Or any relative of such individual. Which individual? My friend. Are you there? Mic testing, check. Hello, check. Are you there? Yeah. Coolly. No tension. Relative of SSE, 1. Any individual, 2. Relative of B, such individual, 3. Now let's name this fellow B. Then this guy, C. Who? That relative. Abhishek, Bachchan, Chetan. Not only that, assume a company, a firm, AOP, BOI, they also have substantial interest in this particular individual's business. That also payment made by the SSE to this company, firm, AOP, BOI is deemed to be 40 if it is excessive. Not only that, any director, member, partner of such a company. Which company? Which has substantial interest? Let's name that person E. Right? A company which has substantial interest. Then director, member, partner of such a person. Which person? Such a company. Let's name him E. That also. Guys, not just that, guys. Law goes one step ahead. Relative of such person also, it seems. Relative of which person? Relative of the person who is a director of one company, and that company has substantial interest. Imagine. This and all you have to check. While doing tax audits, we have to check all this. I mean, we have to at least take, proof that whether it's done, any disallowance there, all that we have to sit and see. Will we see? Nothing. Caro report, 5 minutes, like 2 minutes, Maggi noodles will finish off. Caro report. Here also, tax audit report, you also know, we also know how it is done. But anyway, now things are changing, my dear friends. Okay? Are you understanding? Right? Deadly. Apart from that, let's take one more example. Any random company, firm, AOP, BOI, HUF that may or may not have, substantial interest. The directors, members, and partners of them. See, Abhishek, Hrithik, they have individually substantial interest in that SSE. So let's take one company saying that Bollywood Limited. Bollywood Limited may or may not have any substantial interest in the dry cleaning business. But Abhishek Bachchan has. Abhishek Bachchan is the director of this company. Abhishek Bachchan has substantial interest. Right? Which means any payment made by the dry cleaning business to Abhishek, which is excessive, will be disallowed. See, guys. Hrithik Roshan has. Hrithik Roshan is the director of Bollywood Limited. Bollywood Limited may or may not have substantial interest. I don't care. But Hrithik Roshan has. Done. Alia and Kareena are 2 other directors who do not have any substantial interest. But payments made to them also. Because it says directly or indirectly, even through these other people. Payment made to Alia Karina, gone. This is exactly, see, all that is covered now. That Rendezvous Sports Private Limited practical case I told you, no? Sir, please leave me, sir. I'll tell the income tax department. Income tax department will say, leave. Bro, you are a chartered accountant. No leaving. Correct? Sir, I want to live. Then you go to art of living. Don't do art of leaving. Who did art of living? Art of leaving. Who did? Shri Vijay Mallya. So no. Please bear with my PJs, guys. My name only is PJ. And I'm known for my poor jokes. Pathetic jokes. So they are called only PJs. You will cringe. There was earlier fringe benefit tax. There is nothing called cringe benefit tax. Nothing you will get. You just have to cry. No, my jokes are so horrible that I don't know what to say. My entire family has been insulated now. I keep cracking these jokes at home. My family members will be like this. Over? Huh? When they say over, I said, no, I'm on the 5th ball. Then they'll start laughing. You don't understand the joke? Yes. My cats also. I'll keep cracking the, jokes to my cat also. One cat I'll crack, that cat will turn away that side. Then I'll go see one more cat will be sitting. That cat will be closing its entire head like this, listening to my joke. Once I went to my cat and said, hey, you don't like Perk chocolate, no? You don't like Perk. You know why? Because you like Kit Kat. Cat ran away. Anyway, if you understood, good. If you don't understand, very good. Don't come near me, you will die. Come back. So guys, I told income tax department, please leave me, sir. Income tax department said, no, bro. Not only Abhishek, Kritik, Alia, Karina, but also their relatives also. Their relatives also, if they end up having substantial, if they have or don't have substantial, it doesn't matter. They are also covered. Why? Because dry cleaning business gave some money which is excessive to Rajesh Roshan and Abhishek, Hrithik Roshan is there. No, Rajesh Roshan is there. Rakesh Roshan, sorry. And Rajesh Roshan also is there, his uncle. Then we have our Alia, you have Ranbir Kapoor, Saif Ali Khan, his entire Khandan, Kapoor Khandan, whatever it is, relatives. Dry cleaning business gave excessive payment to Rakesh Roshan. Rakesh Roshan is the father of Hrithik Roshan, who has substantial interest in that business. They are also covered, guys. That's why I'm saying don't sit and see all these things, just for your understanding. Just for your understanding. Can you tell me what this is? Sir, I'm already dead. Class has just begun, I'm already dead. Please help me. No helping. In income tax, it is only yelping. Yelp means what? Shout. No help, only yelp. See, this was added later, 2013. See, a company, firm, association of persons or Hindu under family having a substantial interest in the business or profession of the SSE. A company having substantial interest in the business or profession of the SSE. A company having substantial interest in the business of the SSE. Let's take 60% business of the SSE. Okay, do you agree? That we know already. Holding subsidiary is also covered now. Next. Or any other company carrying on the business or profession. Hold on. Any other company carrying on the business or profession, any other company, Z Limited, P Limited, any other company carrying on the business or profession in which the first mentioned company, has a substantial interest. Sir, please. Oh, I cannot. In which what? The first mentioned company. Which one? H Limited. has a substantial interest. Could be 30%, could be 52%. This is the SSE. Point number one, see, a company having substantial interest in the business of the SSE. A company having substantial interest in the business of the company. So, H Limited is covered. Next. Or any other company carrying on the business or profession in which, the first mentioned company has a substantial interest. Means sister concern. This is a sister concern. This is a associate of H Limited. It has got nothing to do with SSE Limited. So if the SSE company now pays excessive payment to any of these fellows which the AO feels is excessive, disallowed 48 to 48 to 48. Guys, I'm full being dramatic and all that. Don't worry. I'm not one mental fellow, though I am. But all this is needed for you to understand. In the exam, when these questions come, you'll think, oh, this fellow was slapping himself, right? You'll remember. Understood? Mic testing. Is it Houston? Houston, are you there? Yes, sir. So if you see, guys, now this assumed this fellow was a company is what I've assumed. What if this was a person, a normal individual? I've given it here only, no? See, if an SSE is a sole proprietor, this is a company which even if it has substantial interest, even if it doesn't have substantial interest, everything is covered. So just you go through this, more than sufficient. And apart from that, one extra thing is this one. So through that amendment in 2013, they have covered these cases also, inserted by the Finance Act 1/4/2013. Got it? Excuse me. Got it? Now if you see here, it says what? Excessive or unreasonable, having regard to the fair market value of the goods or services. Now this fair market value of goods, services and all, how will I find services? For example, if I am the, director's relative. So the company in which is a director is giving me money for my services. I am providing him consultancy services. Now, what is the market value, guys? Consultancy services, I can charge 10,000 to one company. For you, depending on your case, I can charge 40,000, 50,000. Difficult it is. So that's why, what is this is domestic transfer pricing. Domestic transfer, all these things, transfer pricing is what? Arm's length price. When two people, though they are related, as if they are unrelated, if they are doing business, that's called arm's length price. So their arm's length price to be taken into account or not, domestic transfer pricing provisions will apply. It used to apply before. But domestic transfer pricing officer means, domestic transfer pricing cases means it used to go to a TPO, transfer pricing officer. That fellow used to take his own sweet time to assess all these things. So these cases used to go on for years and years. That is why this proviso was inserted in 2016. No disallowance on account of any expenditure being excessive or unreasonable having regard to FME shall be made in respect to specified domestic transaction 92BA. If such transaction is at arm's length as defined in that particular section. So they have told domestic transfer pricing cases are out of the purview. They said it's not possible for me to check. So now if transfer pricing cases, we'll see that later in TP when it comes to international taxation, we'll see international TP and normal domestic TP. TP cases that TPO will do, that you leave. Now 40A2 from 1st April 2016 onwards, 40A2, when I say assessing officer, see here, earlier it used to be substituted by income tax. It was earlier in 1988 by the income tax officer. Income tax officer involved transfer pricing officer also. Now they have removed it and now they made it what? Assessing officer. So domestic transfer pricing is completely out of the purview of this particular section is what I want to tell you. Got it, my dear friends? Yes or no? Are you understanding? All right. Got it, guys? So, for example, if the company, SSE company, uh, sells goods, to its director, sells goods at let's say just 1 lakh rupees, but the fair market value of those goods are 5 lakh rupees. The assessing officer wants to invoke 40A2. Possible? The SSE only will do A2. To whom? This fellow. Why? See, guys. Where an SSE incurs any expenditure in respect of which payment has been made. Guys, when I'm selling goods, what expenditure is there? Nothing. Expenditure towards what? Fair market of goods, services, or facilities means what? Company should have paid for the goods. There should be some expenditure. Here there's nothing. Paid for the services rendered. Here I'm selling goods, selling, buying, selling goods not covered. Selling goods not covered. There has to be some expenditure. So please note in the exam, if they ask like this, 40A2 cannot be invoked. 40A2 cannot be invoked. SSE company pays to the director salary of 70,000 rupees. This fellow is 10 standard fail. The same company pays to the CA of that particular company only 40,000 rupees. Tell me, 30 excessive. First of all, for his 10 standard, he can just get some 20,000 rupees maximum. That also doubtful only. Can that 50K extra be disallowed? Answer is yes. If the AO feels so, then obviously answer is yes. Correct? So in this particular case, two things will happen. AO will disallow 50K. And for the director, full 70K is taxable. So obviously, guys, to the extent of this 50K, don't you think so it is double taxation? Answer is yes. Kindly note. Answer is yes. The SSE company just pays cash to the tune of 45,000. Maybe like a loan, whatever. Cash. 40A2 will not come because it is not an expenditure. But I had addressed this sometime before also in the classes. 40A3. Any cash payment beyond 10,000 rupees made to a person in a single day, this will be disallowed. So may not be in 40A2, but it can be disallowed under 40A3. That is what we need to understand. Next, There was a, facts of the case I'm taking. Domestic sales, total domestic sales of 13.2 crore. In this domestic sale of 13.2 crore, sale to sister concern was 11.11 crore. They gave a trade discount of 11%. To other companies, they were giving a trade discount of 3%. Will trade discount be considered as unreasonable? Is the question. Will trade discount be considered as unreasonable? It was held in Delhi High Court, United Exports case. That trade discount is not an expenditure. It is not an expenditure. I'll subtract and then give, right? It is not an expenditure. So if you see any related party transaction like this under 40A2, it is covered under Income Tax Act. We have seen it. Something which is unreasonable. Under section 188 of Companies Act, anything with a related party with respect to certain specified transactions beyond arm's length price, you can go ahead and do it, but with respect to certain approvals you have to take. Ind AS 24, if I'm not wrong. Just check the number. No, I think it's 24. Ind AS 24, there the related party definition is extremely wide. This will cover with ALP, beyond ALP, everything. Here related party definition is only restricted to 2 clause 76 of Companies Act Limited. The relative or related party definition here in 40A2 is kind of wide. Widest definition is this one. Widest definition is Ind AS. Quite wide is 40A2. 188 is a different thing. So this is generally the scheme of things that you need to remember in everything. Just, that's how we connect. Now we have to connect and study. So that's about it, my dear friends. Very, very simple section 40A2. We have done it very much in depth. Excuse me, 40A2. So holding and subsidiary also covered, as we have discussed. Relative means all these things you have taken. Beneficial. See, I have given here. Trade discount is not an expenditure. Payment of rent by a company in the capacity of a lessee to a trust lessor in which the director of the company or also trustees will not attract 40A2, since deadly. Trust is neither a company, nor a firm, nor a HF, nor AOP. Deadly. 2012 case law. Where have we seen? Only company, firm, AOP, HF. Trust not covered. Done. 40A2. So we spent a lot of time on this. It is important. Next, 40A3. 40A3. Company made payment of 15,000 in cash. Allowed, disallowed. Company made payment 9,000 each. Overall crossing 10,000. But on the same day. Aggregate payments. Company made 11K, 8K. This basically the 27,000 was the bill amount. I paid 999. One more example, 8K was the bill amount. 8K was bill number 2. 9K was bill number 3. And I made, and to the same person, same day, same person. What do you think? Examples. (40A3) says if it is more than anything exceeding 10,000, disallowed. Okay, here it's fine, disallowed. There was a Supreme Court judgment in Aloo Supply Company. Supreme Court judgment where the bill was, example, 27,000. To the same person the same day, 9K, 9K, 9K they paid. It went to court because it was more than 10,000. This fellow said, sir, I have made it at different points of time. Went to Supreme Court. Check it out. I'll just show you the section now. 40A3. Where the assessee incurs any expenditure in respect of which a payment or aggregate of the payment made to a person in a day. One second, I'll show you that. This was the dialogue. Where the assessee incurs any expenditure in respect of which payment is made. In respect of payment is made. Exceeding 20,000 rupees. Earlier 20. Leave. Now, anyway, in my example, bill was 27,000. Any expenditure in respect of which payment is made was there. In Aloo Supply, they said payment is made some exceeding 20,000 rupees. They said it did not say in a day. They said per payment. That was a decision by Supreme Court. Correct decision. Aloo Supply. Per payment. I made different payments. You said payment should not be more than 20. I made different payments. Aloo Supply was sometime in, 2008. That case law came, if I'm not wrong. On 1/4/2009, law was changed. Finance Act 2008. Before that it happened. I don't know, I'm not sure about the year. Before that only it happened. To nullify the judgment, this amendment came. What was the amendment? You see, of which payment or aggregate of payments made to a person in a day. A person in a day. Bill 27,000 rupees, 9,000, 9,000, 9,000, same person, same day, disallowed 40A3. Nullification of the judgment, Aloo Supply Company. Three bills, 8K, 8K, 9K. 25,000 rupees paid to same day, same person. Three different bills though. Three different expenditure. 40A3 will come or not come? What do you think? All right, guys. So we are still here. Then let us say one more example. Cash payments are made. Okay, bill value is, let's say, 2,10,000 rupees. Cash payments are made on different dates, 10th, 11th, 12th, 13th, 14th, like that. 10,000, 10,000, 10,000, 10,000, 1, 2, 3, 4, 1,70,000. Will this be attracted? 48.3. It is made to a same person, different dates, but amount is more than 2,10,000. Tell me these two. These two are what you need to tell me. In this case, different bills, but same day, same person. All this they'll ask in the exam, adjustment or MCQ. That's why I'm going little slow here. 2,10,001, 10, 11, 12, 13, 14, 10, 10, 10, 10, 10. Last 14th one is 1,70,000. Different dates, aggregate payment 2,10,000. 48.3 will it come? Where the SSE incurs any expenditure in respect of which payment exceeds 10,000 rupees. That's how you should read it. Where the SSE incurs any expenditure in respect of which payment exceeds 10,000 rupees. Or where the SSE incurs any expenditure in respect of which in the aggregate payments exceed 10,000 rupees. Expenditure in a day exceeds 10,000. Expenditure single payment or expenditure aggregate payments. So guys, how to read? You incur expenditure plus single payment more than 10K. Expenditure plus aggregate payment per day. This is single payment per day. So can I say expenditure also should be more than 10K? Don't go by the wordings here. Wording says or. This or is between these two. Expenditure is common. Expenditure plus single day or say single payment per day or expenditure plus aggregate payment per day. More than 10K, more than 10K. So my dear buddies, if the expenditure, that is the bill amount, is less than 10K, even though aggregate payment is more than 25,000, 48.3 will not apply. I hope you understood. Expenditure plus single payment per day more than 10K or expenditure plus aggregate payment per day more than 10K. If aggregate payment per day is more than 10K but expenditure is not more than 10K, 40A3 will not come. So in this particular case, 40A3 will definitely not come. Expenditure as well as the payment should be more than 10K. What about here? Expenditure, total expenditure is more than 10K, okay, but payment should cross 10K. Is it crossing 10K? No. For all these cases, no 40A3. But for this case, 40A3 disallowance. So A is paying this to B, or A 1,70,000 is disallowed. For B, that's the deadly part. For B, we have discussed that before also, again I'll do. 269 ST will come. For this guy, 269 ST, one more section will come under 269 ST. How much? Full, anything more than 2 lakh rupees is disallowed. So full 2 lakh 10,000 what will be what? 269 ST penalty will get attracted there. In respect of a single transaction, though it is on multiple dates, in respect of a single transaction, 269 ST will come. Hold on, I'll show you. All these are deadly areas, my dear friends. Little bit, please concentrate. No person shall receive an amount of 2 lakhs or more in aggregate from a person in a day or respect of a single transaction. This example, 2 lakh 10,000 received on multiple days, but in a single transaction. In respect of transaction, one event or occasion, cannot do it, prohibited. If you do this, this is not allowed. If you do this, 271 DA penalty. 2 lakh rupees penalty or to pay. In some cases, it will be double, but here 2 lakh rupees penalty. This is for the receiver. So why the hell will he actually receive then in that case? Because people were getting away with this. This also is tightened. That also is tightened. Both tightening has happened. Both the places. Screw is getting tightened. Understood? Manassilaya. Purinjita Mapde. சொல்லுங்க சார் చెప్పండి సార్ done come back so just stick to whatever we are writing guys right so whatever we are writing now just write down all the examples it will be easy. Now come to this guys 40A what is otherwise why I am telling cash from that time why can't it be anything else why am I telling cash check it out otherwise than by what account pay check drawn on a bank or account pay bank draft or use of electronic clearing system through a bank account or through electronic mode as may be prescribed. So if you see other than by way of account pay check or account pay draft or use of electronic clearing system. So account pay check, account pay draft, use of electronic clearing system, okay. What if A makes a payment to B through cross check? He does not make the payment through account pay check, makes the payment to cross check. This crossed check will be deemed to be cash payment. Because guys, cross check can be as per Negotiable Instruments Act, cross check can be endorsed. So when A gives it to B, B can give it to C, C to D, D to E, E to F. F will not know B only. But he can come back to B and say, boss, please make the payment. So he can come back to A and say, please make the payment. I have this endorsed to me. A says, I hereby want to pay you 1 lakh. B says, I'll pay you 1 lakh. C to D, D to S, G, G to F. Now, F will come to A and say, sir, see, it was valid for like 2 months. Now, I'm coming to you. It has all come back to me. Please make the payment. It is deemed to be in cash. But if I put an account pay check, right? Account pay check is transferred into the account of the P. If I say pay to B, account pay, it should only be paid to B. Endorsement will not happen there. That's why even cross check will be deemed to be what? Cash. Post demonetization, our country became digitized in the sense that your UPI and all these interfaces came, right? So if you see, recently, 1 April 2020, this other dialogue also has come, or through such other electronic means as may be prescribed. And those electronic means I have given here. Kindly check Rule 6 ABBA. No need to remember rule name and all that. What are the other electronic means? If I make payment through credit card, debit card, net banking, IMPS, UPI, RTGS, NEFT, or BHIM, those things are what? Deemed to be paid through bank. Deemed to be paid through bank. Immediate payment services, unified payment interface, real-time gross settlement, national electronic fund transfer, Bharat interface for money, Aadhaar Pay. All these things are coming into the picture now. And guys, 40A2 and 40A3 can be applied for the same expenditure. If I make an expenditure of 25,000 for my relative, either disallowed under 40A2 or 40A3. Double disallowance will not happen. We will not add back 25,000. Expenditure. Expenditure means capital expenditure or revenue expenditure. Check this. Section 48(3) shall not apply in respect of expenditure for which no deduction is ever claimed. Like for example, capex. Here I'm talking about deduction. So capital expenditure I'll be capitalizing it, right? So if I buy a, what do you say, asset by paying 2 lakh rupees, 48(3) will not come. But the receiver, if it is exceeding 2 lakh, that we see 269 ST and all will come. So land purchased by remitting cash, no disallowance can be made under 43. Similarly, machinery is purchased by remitting cash beyond the prescribed limit, no disallowance can be made under 43. However, cost to that extent shall not be eligible under section 43(1). We have seen that already. Depreciation, actual cost. Please remember, any cash payment, that is when I actually spoke about 48(3), if you remember, already discussed. For scientific research, equipment, if deduction is claimed under 35, provisions of 40(a)(3) shall apply if payment is made other than, because guys, scientific research equipment is allowed under 35. So though it is a capital expenditure, it is allowed under section 35. Since it's allowed, it is hitting the P&L account, and that will be disallowed if you buy a scientific research asset more than 10,000 rupees. More than 10,000 rupees. So here also you see there's a clear distinction between account pay check and cross check. Cross check is in violation of 40(a)(3). Payment by cross check is not allowed. Payment in cash made to case 1, 9,000, 9,500. Different people, allowed. Why? Less than 10,000 to a single person in a day. 9,000 on 10 a.m. and on 7,500 at 7 p.m. on 11/6. Two different times. Same day. More than 10,000. Same person, disallowed. Mr. A, 8,000. 9,000 on 12, 9,000. Though all the amounts is more than 10,000, it's on different dates, so allowed. If in the year 2019 or in the year 2021, I make an entry, any expense, 2 lakh rupees to payable, 2 lakh rupees. In the year 2023, 2 years later, I will make this payment. Payable account 2 lakh to cash 2 lakh. Cash payment. Disallowance will happen in 2023 or 21, or it will not happen only. Should I go back and do a disallowance in 2021, recompute everything, or it will not happen? Read the Bare Act. Where assessee incurs any expenditure in respect of which payment or aggregate payments made to a person in a day, otherwise than by account pay, check drawn on a bank, blah blah blah, exceeds 10,000 rupees. This section is not clear. Issue went to court in many cases. Here they say where incurs any expenditure and payment. Incurrence and payment. Incurrence and payment. The courts ruled that incurrence and payment should happen in the same year. Incurrence and payment should happen within the same year, they said. Like, bro, what is this? That is why lawmakers added 3A. And proviso. Where an allowance has been made in the assessment year for any year in respect of any liability incurred by the SC for any expenditure. My example. Allowance 2 lakhs incurred in one assessment year, 21 I told you. And subsequently during any previous year, SSE makes payment thereof, otherwise than by account page, that is cash. Payment so made shall be deemed to be profits and gains of business, and accordingly chargeable to income tax as the income of the subsequent year if the payment exceeds 10,000 rupees. Which year? It is disallowed and added back in that year. It is deemed to be the income of that year. When I say deemed, I'll add back the expense. Adding back the expense is income only, no? So, no? Then, guys, in case of here, hiring, leasing, goods carriages, hiring and leasing goods carriages, etc. They will go and that person who's in the lorry, that lorry driver only, to the lorry driver, they will make payment. So, lorry, they will go, generally there will be no ATM. Where will he stop for the ATM and where will he take bank, check, everything, nothing doing. So many times, practically what used to happen was the person used to pay him some 30,000, 40,000 like that. It's a very small amount for them. They are dealing in crores and lakhs there. What is bloody 20,000 rupees? So when then they were paying to these, leasing companies, goods carriages, he will transport my goods worth some bloody 10 lakh rupees from that some one warehouse to my warehouse here. Some 20,000 payment. And lorry driver has to go somewhere else. Practically used to happen. So used to pay. Then the company and the AO used to disallow. So all these people went to the ministry and said, at least for some leasing and for hiring these goods carriages, please give me some respite. Hence, in 2009, my dear friends, it was added. In case of payment made for plying, hiring or leasing goods carriages, provisions of 3 and 3A shall have effect. 10,000 is shifted to what? 35,000 rupees. Only for plying, hiring or leasing goods carriage. Ply means to move around. Plying, hiring, leasing. Goods carriages only. Goods carriages. How much will it be? 35,000. 10,000 instead of 30,000. I mean 10,000, 35,000. So on 10th I paid 40,000, assume. On 11th I paid 28,000. On 12th I paid exactly 35,000. Is this 35,000 disallowed? No. Is this 28,000 disallowed? No. This 40,000, is it disallowed? Yes. Infi hires a bus for plying its employees. And on one day, they make a payment of 34,999. Will this be disallowed or allowed? 1000% disallowed. Because it is plying, hiring, leasing of goods, carriages. People are not goods. So hiring, plying, leasing for transport of employees are not governed by this exception, or not governed by the increased amount of 35,000. I hope you understood that. They are not governed by that at all. Right. So now guys, if you see here, no disallowance shall be made and no payment shall be deemed to be the profits. No disallowance shall be made exceeding 10,000 rupees in such cases as may be prescribed. Having regard to the extent of nature and extent of banking facilities available, considerations of business expediency. Expediency means to make it advantageous, for administrative convenience, so to speak, and other relevant factors. Now, this entire proviso is important because they have a rule, 6 ABBA anyway is there. Apart from that, they also, have this particular rule 6DD, which is important. Rule number 6DD, where they have told what all is included, in what all cases, even though you make payment more than 10,000 rupees, still it will not be considered as a disallowance. It will not be considered as a disallowance. That part is given in rule 6DD. So that same thing, if you see, here, rule 6DD is applicable only to what? Section 40A3. This is rule 6DD, very, very important.